Welcome to our deep dive into the financial markets. Today we'll be traveling back in time to October 30th, 2024.
Yeah, think of it as like a time capsule.
Exactly. We're going to be looking at an EQAI Morning Briefing, which was sent out to investors and anyone interested in finance. And what makes this one so fascinating is it wasn't just about numbers, it was a day of some pretty big stories.
Oh, yeah, for sure. We've got big tech placing a gamble on AI, a company that's usually a really reliable indicator of the economy, sending out some warning signs.
Uh-oh.
And then to top it all off, the infamous roaring kitty is back.
Well, let's dive in.
Let's do it.
First, what happened in the markets on this day?
Okay, so the S&P 500 saw a little gain, ending up 0.23% to close at 5,832.
All right.
But the Dow Jones kind of went its own way.
Oh.
Yeah, dipped 0.21% to close at 42,233. Then there's the Nasdaq, which is, as you know, really tech heavy.
Yeah.
Had a pretty good day, jumped up 0.74% to hit 18,712. And then lastly, we have the Russell 2000, which tracks those smaller companies.
Right.
And well, it had like the tiniest gain, just 0.07% to close at 2,238.
Okay, so kind of a mixed bag. Nothing too dramatic overall.
Right. But even on a day that seems pretty average, there's always something interesting going on beneath the surface.
I like that. So give us an example.
Well, the crypto world.
Yeah.
Bitcoin, which is the one everyone knows, dipped 0.83% to 72,104.
Okay.
But Ethereum gained a little over 1%, closing at 2,665.
Interesting. You see these little divergences all the time in the markets. I feel like that's where you can get some real insight.
For sure.
Speaking of going their own way, let's talk about oil prices. The briefing mentions that oil prices were trying to stabilize after hitting 7-week lows, but investors seem less concerned about all the geopolitical turmoil happening in the world. Why is that?
That's a great question. It's kind of a complex situation with lots of things influencing oil prices. So yes, geopolitical events can really shake up the market. But this time around, it seems like investors are more focused on like the bigger picture.
And what is the bigger picture in this case?
The potential for a shaky demand outlook, coupled with just a surplus of supply.
So they're not so worried about sudden disruptions, but more like concerned about the fundamentals of supply and demand.
Exactly. And this is where a key concept in finance comes in. Investor psychology.
Okay, tell me more.
The market's not just driven by data. It's also influenced by emotions, by expectations, and even herd mentality. And understanding the psychology can be just as important as, understanding the numbers.
Makes sense. So keeping an eye on both the numbers and the sentiment is key.
Absolutely.
Let's talk about AI, which has been creating quite a buzz lately. The briefing highlights how companies like Apple, Meta, and Amazon are under pressure to prove their AI investments are paying off.
You got it. Those tech giants have invested billions into AI, and investors are getting a little impatient.
So will earnings reports for Q3 be crucial?
Absolutely. Wall Street wants to see proof. They want to see that AI is not just hype, but a real game changer that can increase profits.
So it's almost like Judgment Day for AI.
It really is. We're at a turning point here. If those tech giants can actually show some practical AI applications that generate revenue and actually impact their bottom line, it's going to send a strong signal that AI is here to stay. But if they don't deliver, it could trigger a wave of disillusionment and potentially even a market correction, particularly in tech.
Wow. So AI is high stakes.
Definitely.
All right. Let's shift gears a little and talk about something that always seems to overshadow the markets: elections. The briefing mentioned that historically the markets favor incumbents in presidential elections.
Yeah.
Why is that?
That's a good question. It most likely comes down to uncertainty, which markets don't like.
Of course, who does?
Incumbent presidents, they represent continuity, the continuation of existing policies and a known factor. And change brings unpredictability. Investors a lot of times take a wait-and-see approach during elections, which can kind of dampen market activity.
I see. So it's kind of like investors holding their breath, hoping for that familiar face to win.
Yeah, in a way. Obviously, it's not the only factor, but it's definitely something to consider as we get closer to election season. I think it'll be interesting to see how this all plays out in the next few months and if any election jitters start to show up in the market.
Right. Okay. Elections, AI, oil, lots to think about. Let's talk about a company that's usually a good indicator for the economy: Caterpillar. And it sounds like they might be sending out a warning signal.
Yeah, that's a great way to put it. Caterpillar is a major player in heavy machinery and construction. So how they're doing is often seen as a barometer for the overall health of the economy.
Right.
And the news isn't great. They reported a profit miss, which is rare for them, and their revenue has fallen short of expectations for 4 quarters in a row.
For those of us who aren't financial experts, why is Caterpillar considered a bellwether, a term I hear all the time in financial news?
Well, think about it this way. When construction and infrastructure projects are booming, it usually means the economy is doing well. People are investing, businesses are expanding, and there's just this general sense of optimism. But when those projects start to slow down, like what we're seeing with Caterpillar, it could be a sign that things are cooling off, maybe even heading towards a recession.
So their struggles could be a red flag for everybody.
Yeah, it's definitely something to keep an eye on. It doesn't necessarily mean a downturn is guaranteed, but it does raise concerns about the pace of growth, especially in the industrial sector.
All right, enough doom and gloom for now. Let's get back to something a little more exciting. Remember Roaring Kitty, the guy who became a legend during that whole GameStop thing?
Yeah.
Well, he's back, and this time, he's shaking things up at Chewy.
Yes, Keith Gill.
Yeah.
That guy really proves that even individual investors can still make a splash in the market. Chewy stock took a hit when he decided to sell his stake in the company.
That's wild.
It really is remarkable how someone like him, without, the big money of a hedge fund, can still move the needle.
It really speaks to the power of social media and online communities in shaping investor behavior.
100%. The Roaring Kitty effect is a perfect example of how individual investors, especially those that are vocal and build a following online, can influence, especially for specific stocks.
It's interesting how all of these events, oil prices, AI, elections, and even Roaring Kitty all intertwine.
Absolutely. And what's even more interesting is how these seemingly separate events are all connected by a few big themes that we'll unpack in the next part.
Sounds good. We'll be right back to connect those dots after a quick break. Welcome back. My head's spinning a little bit. We've got oil prices, AI, elections, Roaring Kitty. It's a lot.
Yeah, the market can feel like a whirlwind, but I think that's part of what makes it so interesting. And as we dig a little deeper, you'll start to see how these seemingly random events are actually connected by a few underlying trends.
Okay, I'm ready to connect the dots. Where do we start?
One theme that keeps popping up is the transformative power of technology, particularly AI. We see it in big tech's big bet on AI, but it goes way beyond that. Healthcare companies like Biogen are using it for drug discovery, and even the energy sector is exploring AI for things like optimization and efficiency. It's really impacting every corner of the market.
It's like AI is the invisible hand shaping the future, which is exciting, but also a little bit scary. What if these big AI bets don't pay off? What happens then?
That is the question. And it ties into another big theme, economic uncertainty. We've got Caterpillar sending out those warning signs. We've got rising mortgage rates, which could cool down the housing market. And of course, we've got the election coming up, adding another layer of unpredictability. So yeah, there's definitely a sense of caution in the air.
So how could all of those things potentially impact me as an individual? I'm trying to wrap my head around the real world implications of all this.
That's the key question, right? Okay, so let's take Caterpillar, for example. Remember, they're considered a bellwether because their business is so closely tied to construction, to infrastructure projects, and just overall industrial activity. If they're struggling, it could have a ripple effect on other industries.
Yeah.
Take the housing market. If construction slows down, it's going to impact the supply of new homes, and that could push prices up even higher. And then those rising mortgage rates we talked about become even more of a burden for people who want to buy a home.
Wow, I hadn't thought about it like that, like a chain reaction.
Exactly. And that's why it's so important to stay informed and look for those connections. It's not just about understanding what's happening, it's about understanding how it all fits together.
Okay, so we've got technology disrupting things, economic uncertainty looming, and elections adding to the mix. Sounds like a recipe for anxiety. But are there any silver linings here?
Of course. Uncertainty can actually create some amazing opportunities, like the move towards renewable energy. Yeah, it's driven by worries about climate change and the need for energy independence, but it's also creating huge opportunities in the clean energy sector. The same goes for AI. While there are risks, there's also this incredible potential for innovation and growth in healthcare, finance, and countless other industries.
So it's not all doom and gloom. It's about recognizing both the risks and the opportunities and making smart decisions.
Exactly. And that's where knowledge comes in. The more you understand about how the markets work, the better you'll be able to navigate the ups and downs and find those, those hidden gems of opportunity.
Love that. So let's go back to those individual company stories for a minute. Biogen doing well, Caterpillar struggling, and Roaring Kitty, well, doing his thing. What can we learn from these examples?
Well, Biogen's success really highlights how important innovation is and having a solid lineup of new products in the pipeline, especially in a fast-paced sector like healthcare. They beat earnings expectations and raise their guidance for the future, which tells us they're not just sitting back, they're, actively investing in the future.
So it's a good sign, not just for Biogen, but for the whole biotech industry.
Yeah, definitely a positive sign. Shows there's still lots of potential for growth and innovation in healthcare. Always encouraging to see.
All right, let's talk about Caterpillar. They're seen as a bellwether for the economy, so their struggles could mean trouble, right?
Well, it's not a surefire recession predictor, but it's definitely a yellow flag for sure. Their performance suggests that the industrial sector, which is, a key part of economic growth, might be losing steam. And that can have consequences for everything, jobs, consumer spending, and even the stock market.
So what does that mean for me? Should I be worried?
Worry is rarely productive when it comes to investing. Instead, use this information to your advantage. Maybe it's time to take a look at your investment strategy. Are you diversified enough? Are you invested in sectors that might be more sensitive to an economic downturn? These are questions you should be asking yourself.
That's good advice. I have to admit, I tend to get caught up in the day-to-day and forget to look at the big picture.
Yeah, it's easy to do.
Yeah.
But it's really important to step back and look at those broader trends. And that brings us back to Roaring Kitty. His influence on Chewy's stock is such an interesting example of how the whole world of investing is changing.
It's like the Wild West out there, with social media and these online communities playing a bigger role than ever before.
It really is. Individual investors now have more power to shape market sentiment, especially when it comes to specific stocks. It's a trend that Wall Street's still trying to figure out.
Makes you wonder what the future of investing will look like.
That's a great question, and one we could talk about for hours. But for now, I think the important thing to remember is that the lines are blurring between individual investors and institutional investors. The Roaring Kitty effect is just one example. And you know what? It's a game you can play too.
Okay, so I'm feeling a little more empowered now, less intimidated by all this market talk. If I were to take away one key insight from our look back at October 30th, 2024, what would it be?
I think the most important thing is that even a single day in the market can be a microcosm of the bigger economic trends and how investors are feeling. By paying attention to these seemingly small events and connecting the dots, you can gain a much deeper understanding of what's shaping the financial world, and you can make smarter decisions.
That's a great way to put it. It's like a puzzle. The more pieces you can fit together, the clearer the picture becomes. But there's always more to learn, right?
Always. The market never stands still. So learning is key. And you know what? I think it's time we took a closer look at a couple of those company stories, especially Biogen and Caterpillar. Their contrasting performances really give us some valuable insights into sector trends and investor behavior.
Sounds good to me. Let's dive back in. Okay, so let's focus on those individual company stories that stood out that day. Biogen doing well, Caterpillar with some mixed signals, and of course we've got the Roaring Kitty factor.
Each one kind of gives us a look into a different part of the market and shows how companies can actually influence investor behavior.
So let's start with Biogen. They had a pretty good day. Earnings beat expectations. Stock was up. What's the story?
It's a great example of how, innovation and having a strong product pipeline can really drive growth, especially in a sector like healthcare that's always changing. Not only did they exceed those earnings estimates, they also raised their guidance for the future, which tells you they're pretty confident.
So it's not just about how they're doing now, but their potential to develop new drugs and therapies in the future.
Exactly. Investors are always looking ahead, trying to predict future earnings and growth. And a solid pipeline of potential blockbusters can really push that stock price up. And for Biogen, it seems like their investments in research are paying off.
So for someone like me who's interested in healthcare, Biogen's success is a positive sign. There's still room for growth and innovation in that space.
Oh, definitely. It shows that companies that are willing to put money into research and bring those new treatments to market can really thrive, even in a super complex and ever-changing industry.
Okay, that's good to hear. Now let's talk about Caterpillar. Their story seems a bit more, well, concerning. They missed those profit expectations and revenue's been lagging. What's the deal?
Caterpillar's performance reminds us that even the big guys can face some challenges. And remember, they're considered a bellwether for the economy, right? Because their business is tied to construction, infrastructure, all that industrial activity. So when they struggle, It could be a sign that the whole economy is slowing down.
And for those of us who aren't economists, what does a potential slowdown actually mean? What should we be looking out for?
Well, a slowdown can affect a lot of things, job growth, consumer spending, even the housing market. If businesses aren't feeling confident, they might hold back on investments and hiring. And if consumers are worried about their jobs or the economy, they might start spending less. And the housing market, which is very sensitive to interest rates and economic conditions, that could cool down too.
So Caterpillar's like a warning sign.
Yeah, it's a signal to pay attention and maybe adjust your financial strategies a bit. Diversification is always smart, and it might be a good time to think about moving some investments to sectors that aren't as affected by economic cycles, or even look into some more, defensive strategies.
Right. So being adaptable is important. Now, for something completely different, let's talk about Roaring Kitty. His impact on Chewy's stock is just fascinating. It shows how much influence individual investors can have.
The Roaring Kitty phenomenon is a perfect example of how the world of investing is evolving. Social media and online communities have given individual investors a voice. They can share ideas, they can coordinate their trades, and even influence market sentiment.
It's like investing is becoming more democratic. Everyday people have more say than ever before.
Yeah, in a way. And while there are definitely some risks that come with that, it also has this amazing potential to empower people and make the market accessible to more people.
So what's the takeaway for someone trying to figure out this new world of investing?
I'd say knowledge is key. The more you know about market trends, how companies work, and even investor psychology, the better decisions you'll make. Don't be afraid to do your own research, ask questions, and stay engaged with the market. It's an exciting time to be an investor. There are always new opportunities coming up.
Well, this has been an incredibly interesting deep dive into October 30th, 2024. We've covered so much: big tech, AI, oil prices, elections, even Roaring Kitty.
It's been quite a journey, but hopefully you've gotten some valuable insights.
I definitely have. I feel like I have a much better understanding of how everything's connected and how it can impact the markets and my own financial decisions.
That's what we're here for, to help you understand the market and make those informed choices.
Well, mission accomplished. Thanks for being my guide today.
My pleasure. And remember, the market's always moving, so stay curious, stay informed, and keep exploring.
And to all our listeners, thanks for joining us on this deep dive. We'll be back soon to explore another day in the fascinating world of finance. Until then, happy investing.